Hello everyone, Kevin DeSilva here, and today we're bringing you the October market update. Now, a little about myself. I am the owner and founder of the Kevin DeSilva Group. It's the number one small team at Douglas Elliman in all of the state of California. We work really hard to do what is necessary to keep you informed about the market so that you don't have to search around for it or stumble upon something that's inaccurate. That said, let's get started on what's going on here in Los Angeles. So, the market has remained relatively flat. In fact, has only moved a few $1,000s since July. The average price of a home selling is only up a few $1,000s. And the flatness can be explained by the rising interest rates. The Fed decided to stop doing their pause and move forward with raising interest rates, and that has caused the market to flatten out. Now, markets typically, in my experience, do peak in May, June, and July anyway. But the fact that it hasn't come back despite rising interest rates is a good sign. However, let's talk about what's going on. We expect this flattening trend to either continue, but very quite possibly reverse, in fact, start to soften. Why we think that is because of this. Watch this. Here's what's happening this month. Although there are only 6.3% fewer listings on the market, which shrinking supply usually means fewer sales, but it also means fewer homes to pick from, there are 16.9% fewer sales actually taking place. So buyer demand is outpacing the amount of homes that aren't coming on the market. And it's not a coincidence when this happens that the months of inventory is creeping up towards 3 months. What is months of inventory? Well, if no other home ever came on the market, it would take 2.8 months to sell every home in Los Angeles. Essentially is how that works. Now, in other states or other cities, I've found that 6 months of inventory spells a neutral market. However, in LA, where inventory is usually a shortage, I find that 3 months is when buyers start to really take their foot off the gas because they have choices. And that's what happens. So buyers become less competitive the more homes that come on the market. There's 7.7% more homes sitting on the market now than there were in September. Now, this is great for buyers. If you're thinking about buying a home, the next 2 months could be the best opportunity you get because the Fed has said, although they've paused interest rate hikes this time, that they're considering increasing them again in the future. In fact, not considering, they're pretty confident that they will be. The market is still up for them in their eyes, and they want to continue to keep downward pressure on inflation. Now, just because it's great news for buyers doesn't mean it's bad news for sellers. I mean, if we look at where we've come so far this year, even if we drop 1%, we're still up 9% from the beginning of the year, which was the bottom. And I've said this before in previous videos, the beginning of this year was the bottom of the real estate market. The market had dropped 12%. We're back up 9% since December, January. And if it went down 1%, that's still 8%. Now, is it still down from the peak? For us, yes, it is. The peak was last year in June. The market dropped 12% before rising 9%. So if we come down 1% in the following months, you're still pocketing 8% from the bottom. That said, we do expect homes to take longer to sell. We expect fewer offers, fewer showings, and this is where pricing becomes very important. The more selection that buyers have, the more accurate you have to be on your price. Aspirational pricing doesn't work when a bunch of your neighbors are priced lower than you. So if you have any questions about how this affects your situation, if you're looking to buy a home, what does that look like for you? What are rates? What are prices? What can you afford? Contact us. We want to be here to help you make the right decision on your next home. And if you're thinking about selling and you either want to get some work done and you want to look at what is my ROI, what's my return of investment on improving my house, or you want to just be done with the house and move on to your next one. You want to take advantage of this lull and go buy and use your current equity to go buy your next house, contact us. Let's take a look at the value of your house, and we'll take a look at what it will help you buy with your next home. Once again, Kevin DeSilva here, wrapping it out. You guys have a wonderful October, and I'll see you guys again for the market update in November and every email we send moving forward.